All right. Hi, welcome in everybody. I am your creator, Jason, of the TCP SuperSystem that is on the screen. I'm gonna come to you a little bit late tonight. It's 10:46 on a Friday night, April 25th. This is our second show of the day, so I would urge you to go back and look at the previous video. And I would say we're coming to you with a second video tonight because we have some new alerts that came in. You can see on the screen. We got 3 new ones from the one we did earlier today. That's for Atom, API 3, and Base. So we're going to go over those real quickly tonight. And as a reminder, uh, anything we share here with the system, the interpretations, the signals, it's not financial advice. We're not advisors. We simply share this in hopes that you can leverage some of this information in your own research efforts. As I did spend 2 to 3 years building this system, refining it through a lot of pain and experience. Uh, and I do this for free in the hopes that you'll like, share, and subscribe to the content, help us grow the channel. That way we can keep it free. So, bottom right, you'll see Fiat Leak just so you can see the volumes of the different cryptos around the world coming, well, at least in the US, coming in right now. So you can see Bitcoin flying in, XRP, Cardano, looks like a little bit of Avalanche. So pretty neat there. And again, this system is really designed to help us identify those areas of opportunity where we can make key decisions, right? So the signals aren't necessarily recommendations to buy or sell, but it helps us identify those areas. And I'm going to give you a prime example right here with Base Protocol. That alert came in at 7:10 this evening, which was about 3.5 hours ago, and it hit a confirmed trend reversal to the upside at 28 cents, right? So right here. Currently trading at just a fractions of a penny higher. So I mean, nothing special. But again, I'm not going to go through what all these signals mean because we did that earlier today. We are putting together the training videos that will walk you through the main indicator, the 3 hot sensors at the bottom, the mean reversion data at the top. So I'll leave it there for the training piece. But I will say on the main, the most opportunistic areas are generally where the dark red diamonds are and the dark green diamonds in conjunction with the other signals, and we'll give you an example right here. So for base, we got our last dark red diamond happened back on December 1st. It was trading around 305, right? Then it crashed. You had your trend change with the red cloud, and then boom, down it goes. But a lot of people will come to us and say, well, your dark green diamond, wasn't that great. It fell much lower than that. But I want to show you something. And just because you get a dark green diamond doesn't mean you have to buy. And we're going to show you how you interpret this. And this is why we bring this to you daily. So if you would have hit the dark green diamond down here at $1.10, I do want you to see what happened immediately following that. Boom. $1.65. I mean, that's 50 to 60%, ladies and gentlemen, in like 4 days. So I won't say it didn't work, but we're typically looking for trades longer than that. So I'll show you how you could have avoided doing something here that would have resulted in you experiencing this pain. And that is right here at the bottom, the hot sensors, short term, medium term, long term. Again, here, you're looking for something that's in the red zone, right? But look at the first dark green diamond. What do you notice in all 3 hot sensors? 1, we've barely even crossed over to the downside. 2, what are we, white or gray? That is not a confirmation to buy at the bottom. So you could have avoided that one pretty easy. Next one. Again, look at the hot sensors. Now the short-term one, we were trending below the midline, but it was still, what, yellow at best? Gray, blue, blue? Still not time. Now, granted, again, look, the following couple of days, you still made a nice gain. So this is like a win-win in both worlds, right? All right, next dark green diamond. Now we're getting a little closer, right? So look at the bottom, yellow, orange, orange, still not red. But again, look at the next day or two. Boom, nice return. Okay, next set. Now we're getting I would say a little bit closer. We're yellow on the top hot sensor. We're entering red, right? Well, not quite, almost. So the end of the orange, and then we're orange. So still, no, I wouldn't really say we're red yet. And this one didn't quite get you a huge return, but you still got a nice little return there. I mean, that candle did go up. So none of these were losses by any means. And then your final set here that just occurred back on, I will say February 20th. Look at where the diamonds are, my friends. Orange in the short term, red, red, that's medium and long term. And when you have the medium and long term in the red and a dark green diamond, something to consider. I will just tell you that. And then look at here. This would have been right at the bottom. So right around 31 cents. And we're right around that range. So, I mean, to me, that's hitting the bottom. You're in the red. Now, what we need to see now is we got some choppiness here, some sideways action. So you got a bunch of yellow signals back and forth. That's why you don't just trade on yellow signals. We don't really do that much, a whole lot. But most recently, confirmed uptrend tonight at 28 cents and 0.28357 to be exact. So it is up a little bit from that. But again, here we go. Hot sensor, nothing too crazy, but we're in the red on the long term. So I like that. But anytime we have a yellow signal, whether it's a triangle or an up label, we always say 1 to 3 days to get more confidence and kind of get a confirmation there. And the one thing that we would say here is looking at our mean reversion data, this isn't that great. You got your red fast line is it's sloping downward. We want this thing to be back up into the red zone here or even up in the extremes. So we're not ready yet. So that's really not too impressive on base, to be honest. I think it's like if you wanted to say, oh, I'm going to dollar cost average here, yeah, we could do that here. And again, that's not financial advice, but that's how we would view this as like we wouldn't go all in here hardcore. We would be, yeah, it's a good dollar cost average because we've had a huge downturn. We avoided these. We're in the red here, and now we're just waiting for the pump. So if you need a little more confidence, you could wait until you saw this red line get up into these extremes or up above this red opportunity zone. You would want to see the orange line entering the green and the blue line approaching it, and then I'd be ready to fire. So that's base tonight. API 3. This is one. I'll be honest. I like it. This is a sleeper to me. I probably won't see a lot of people saying that, but I do like the team behind it. You can go look them up. If I recall, was it Cal Berkeley maybe somewhere. But anyway, they're pretty intelligent. I haven't really looked at their profiles in a very, very long time. But again, you can see we've come down quite a good bit from the top, which was around 271-ish. We did have that potential. We never really got a red diamond, so that would have been something for you to consider. But you did get a confirmation of trend change here, which would have been around 208. So that's a hell of a lot of pain you still were able to save, right? And then again, going into the dark green diamonds, look at the hot sensors at the bottom. They were not anywhere near red, but you still got you a little kick here. But, you'd have to time that. And usually what happens, you'll get a kick right back to those clouds and then right back down. And the moving averages are serving. These are moving averages, the 3 lines. So that's your resistance lines at that point. So makes a lot of sense, right? Next area, we're getting a little closer here. You're red on the short, medium term, orange on the long term. So, but I want to show you something. Look at where that is, right about there, right? Look at where your price action is. So right about there. So if you would have done the dark green diamond, you would have experienced this nice hell of a gain right up to the 200-day moving average, which is going to be support, and you had dark red diamonds telling you to get out. And look at where these red diamonds were. Red, short term. So you could have easily made a scale out. That probably wouldn't have been a full liquidation for us though, because again, only one of these was red. But that's a nice return, right? So you got to pay attention to that. And if you look at the top, you can see that red line was in the extremes. Oh, well, actually, I'll show you this. So just like what we said a moment ago. So if you were in here, the dark green diamond, right? It came down again, but look at where your red line is here. Actually, right about here. So right before that huge spike, look at this right here. You're getting above the red zone. Your orange line wasn't quite there yet. So your orange line really didn't get there until, I'd say, like right, you'd have to say right there. So, I mean, that's probably the bar after the big spike, but you still had the secondary spike. And that's that scenario that we're looking for. The red line's in the extremes, orange line's in the green, blue line is approaching. So there's that spike that we always like to see. So you could have scaled out there, had another opportunity down here, and look, what do you know? Long term hot sensors in the red, you got the dark green diamond. So now you would have had entry opportunities here and here, which is actually lower than where it is now. So your average is probably in the middle there. So you're probably still in the good. And now what we're seeing is the confirmed trend reversal. So this will turn green. And now look at here. This is pretty. You've got your red in the extremes. Your orange has come through that green opportunity zone and your blue is entering it. So that is a beautiful setup. You are getting a crossover, but not overextended on the short-term hot sensor. You are improving your color schemes on the medium. Not quite a crossover just yet. And you're improving your schemes on the long term. Still a ways to go, but it's improving. So this one, I would say, would be much more primed than the base at this point in time. I'd be much more willing to go in here than on the base, given the entire setup. So that's how we would do API 3 right now. Again, not financial advice. We got some action on Fiat Lake down here. There's some Shiba for you meme coin fans. Bitcoin, Ethereum. Is that Uniswap maybe? Ethereum. Stellar. There's some Stellar. Cool. All right. And last one for the night, for the secondary show, would be Atom. And we will take a look at this one. Again, look at this dark green diamond. It's fantastic. Look at the hot sensors. See, you're already in the red up here. Now, strange enough, we never got a dark red diamond. Well, we got one back here in the red, so you could have got out. You would have got out here, which is what, 925-ish. It did go up to about 1039, so that's pretty damn close. And you're in the red on two of these, so you could have easily made that decision. You got your downtrend, your green. The hot sensor was already back to normal. Wasn't really crossing over, wasn't showing any kind of exhausted state, so you could have avoided that. Avoided all this pain. Now, you're getting a confirmed trend reversal. Oh, look at here, look at here, look at here. Short term, crossover, medium term, significant improvement, about to crossover. Only in the gray on the down, still waiting for the long term to kind of cross, so very, very close here. With your premium setup, red's in the extremes, orange has come through the green into the red, blue is into the green, so that looks pretty good too. The one thing I would say about this one, we like the red to stay up here. So if we see that red come back down to that red zone and penetrate back below it, that's not a good sign. So we need to watch this one a little bit closely. In comparing that to API 3, see, that's on the up, going up into the extremes, where Atom is coming back down. So if we had to rank these right now, we would go API 3, Atom, and then base. That would be our pecking order for us to scale in on a move here. So again, that's why we bring this to you nightly, and I try to help you in your research efforts. Again, none of it's financial advice. Make your own decisions. But I will tell you, this system is extremely useful for us in making alpha returns that far exceed normal returns. So have a good night. Hope you enjoyed it. We'll come back with you tomorrow and check out the alerts and see if there's any relevant news out there. Till next time, best trading.